At this time, I'm about to turn it over to Andrew Keene of KeeneOnTheMarket.com. For those of you that get our Trade of the Week emails or go to the marketdeal.com/trade of the week, you know that some of the best content on there, without a doubt, is from Andrew and his team at Keene of the Market. Those guys are like a trading content machine, pushing out really good education all week. If you follow him on Twitter, then you see a lot of that as well. Again, he's got a huge Twitter following, and is just a great trader, a floor trader, and he'll tell you a little bit about his background, but has a very impressive background from that, and has been able to transition successfully from the floor to trading on the screen, which is a rare thing. So Andrew, at this time I'm going to turn things over to you. I'll put a timer up there so you can kind of keep track of it, but the next 50 minutes, the room is yours.
Thanks, Morgan. I hope everybody's here to learn. My presentation today is going to be a little bit different than any presentation you've ever seen today. It's okay to take out paper, take out notes. This will all be recorded, but this was very different than anything you've ever seen before. I promise you can ask as many questions as you want at the end, so feel free to ask questions at the end. Floor trader secrets, confessions of a professional options trader. Obviously, past performance is not indicative of future results. So my name is Andrew Keene. I was a floor trader on the Chicago Board Options Exchange for over a decade. I started there right out of college, and I was a market maker in over 125 different classes. In my trading career, I've traded over 1 million equity options and 40 million shares of stock. These are not a group position. This is all on my own, okay? So I am the most active trader you probably guys will ever see. I am trading all day long. I watch the futures trade probably about 17 hours a day. So I'm a very, very active trader. I'm sure you guys have all seen me, CNBC, Bloomberg, Fox Business, Sky Australia, BNN. So I'm all over the place. As you know, I do contributions as well to TheStreet.com, Minionville, Market Deal. So I'm all over the place, and I'm guys here to teach you something that you've never ever seen before. This will be a very, very interesting presentation. So just a little disclaimer here, trading is risky. You know, you can lose money trading. I'm here to help you not lose money, hopefully. I am not a registered investment advisor. I cannot give recommendations or advice. I can just tell you how I've traded over my career, which has been trading for over a decade, and I want to be here to help you guys hopefully, you know, make money in the future. Okay, so little disclaimer here, and we can get through that. So let's talk about something here, okay? When I was on the floor of the Chicago Board Options Exchange for over a decade, okay, I watched institutional order flow, okay? Everybody's seen, you know, stock trade before, and there used to be something called reading the tape, trading stock, okay? If someone is going out there and buying 1 million shares of stock in Facebook, right, that's a big order, and you want to follow that order. Well, the thing with stock now, and the problem with stock, it's actually there's dark pools, right? So they can trade the stock off the floor. However, one thing they can't do is they can't trade options off the floor. There is no dark pool for options, okay? I'm an equity options trader. That's what I've done for over a decade. That's my career, okay? Have I traded futures, Forex, stock outright? Sure, but I always go back to my bread and butter. I go back to what makes me money, and that's equity options. So let's do a little terminology. What is paper, okay? When I was on the floor, broker would come into the pit, he would have a piece of paper, and then he'd read his order, okay? Then we would react as market makers on his order. For over 2 years, there was a Merrill Lynch broker that would come into the pit, and he would sell. Are we on this right slide here? Okay. So when I was in pit, we had a broker that come in, Merrill Lynch, for over 2 years. He would sell Apple put spreads for over 2 years. Every single time he would sell put spreads, if a big trader is selling put spreads, it means one of two things. He's selling implied volatility and he's getting long. So for every time this broker would come into the pit, it was a red flag for me to get long the stock, okay? It was that easy. Reading institutional order flow. So paper just describes a order from a hedge fund, mutual fund, retail bank, or big trader. So I watch institutional order flow. I'm sure you guys have all seen Dr. J on TV, John Najarian talks about this, institutional order flow. How can you trading on institutional order flow? Who are the players, okay? The players, as we said, hedge fund, mutual fund, retail bank, or big traders, okay? I want to see someone taking $1 million bet on something, and then I can allocate a percentage of my book on this trade. Why is paper important, okay? I want to see what the institutions are doing, okay? Hedge funds are smarter than me, okay? I will say that right off the bat, okay? If a hedge fund is willing to put a bet on something, I'm willing to allocate a percentage of my book on that trade. This does not work in stock. This does not work in futures. This does not work in forex. It works in equity options, and it works like a charm, okay? I've been doing this for over a decade, and this works great for institutional order flow. So, what kind of orders are there? There's two types of orders. We all know this, okay? There's calls and there's puts. Calls are bought for one of two reasons. Calls are bought as a speculation to the upside or a hedge against a short stock position. Calls are sold for one of two reasons, a protection against a long stock position or speculation to establish a short position. Puts are bought for one of two reasons, protection against a long position or speculation to the downside. Then puts are sold. For what reason? Protection against a short stock position or they want to get long. Okay, and I'll talk about all these individual situations in a minute. Okay, my number one, if I see puts being sold, okay, 80% of the time in general, puts are not sold against a short stock position, okay? You can sit there, you can look at every single chart you want, you can look at every single indicator you want, it doesn't matter, okay? Anything in this world is worth the difference of what someone's willing to pay for it and if someone's willing to sell it for it. If a hedge fund is coming in and selling 10,000 puts in a stock, so the other day we had one in CBG, okay? If the hedge fund is willing to sell 10,000 puts and establish a long stock position, okay? You can use every indicator you want, you can use every technical, RSI, you can use MACD, you can use Ichimoku Cloud, it doesn't matter. All it matters is what the institutional order flow is worth, okay? You think about housing in the United States. How much is a house worth? Very, very easy. What someone's willing to pay and what someone's willing to sell it for, okay? So I'm watching hedge funds trade all day long. $1 million bets go across the tape. I'm watching over 2,000 equity option trades in the day. Over the last decade, I've realized how to take those 2,000 trades and then put on the best 4 to 6 trades daily, okay? Someone says, if you guys want to learn something, you want to learn someone that trades, I'm the most active trader out there. Like I've said, I've traded over 1 million equity options. I am trading all day long, okay? There's no breaks for me during the day. From 8 a.m., I usually get up at about 6:30. I watch my stocks trade from 8 a.m. to 3:30. The only thing I wish was the equity option market was actually open, longer. And I've actually pushed to the SIBO for that. Our scanner basically tells us if the volume is bought or sold. Okay, so let's break down the types of order flow, okay? Options get a very, very bad name in the industry, and the reason for that is people don't know how to properly trade options, okay? When you buy an option, the most you can ever lose is what you pay for an option, okay? So let's talk about the 4 order flows here. So let's talk about the 4 order flows here, okay? Number 1, a trader or paper buys calls. Over my course of a decade, when I've been watching this, 60% of the time, this is bullish. 40% of the time, it is bearish. And you say to yourself, Andrew, how is it possible for paper or the hedge fund to buy calls and to be bearish, okay? Part of the mystery, part of the game is we do not know a trader's stock position on against their option trade, okay? I had a perfect example in WLP, WellPoint, okay? When I was trading on the floor, institutional order flow, hedge fund came in and bought 10,000 calls in WellPoint. Oh, perfect. I'll get long. I got long. The stock went down $3. How did I lose money? Next month, they came in, bought 10,000 calls again. Stock went down again. At that point, I realized this trader is buying calls against a short stock position. So I have to figure out if it's a hedge or a speculation against a stock position. I want to trade the speculative trades. I don't want to trade the ones that I think they have a stock position on. So we see here, if paper buys calls, 60% is bullish, 40% is bearish. Paper sells calls, 50-50, okay? Sometimes you can actually sell calls against a long stock position to establish a dividend yield, and sometimes you're actually selling calls to establish a short position. Next one, paper buys puts. And remember, paper is very, very easy. It is a order from a hedge fund, mutual fund, retail bank, or big trader. And this is 65% bullish, 35% bearish. And you say to yourself, Andrew, how is it possible that if a trader buys puts, it's bullish, okay? The hedge fund community has gotten much smarter throughout the years. Everybody sees on TV how the SEC is going up against a bunch of traders because traders have, basically bought calls and the stocks got taken over. When JP Morgan actually bought Bank of America, I lost $58,000 that day. So you say to yourself, if they buy puts, that can't possibly be bullish. How is that possible, okay? So if I was a smart person and I knew that XYZ was going to go from 50 to 100, I would not buy calls. Buying calls is a red flag with the SEC. So what I would do is I would buy stock and then I would buy puts, okay? Yes, puts, not calls. Well, why is that? Because I make money on my stock. Yes, I will lose a little bit on my puts, but everybody knows the synthetic of a call is long put, long stock. Number 4, my holy grail situation, okay? Yeah, this should be bullish and bearish. Number 4, my holy grail situation. Paper sells puts. 80% of the time, okay, 80% of the times, this is bullish activity. Very, very rarely do I see a trader selling puts against a short stock position. So when I watch the institutional order flow all day long, I look for selling puts, and then I can base a trade off of this. Does reading paper work 100% of the time? Absolutely not, okay? It does not work 100% of the time. Nothing works 100% of the time. I have made over $5.5 million in my career, okay? $5.5 million. We keep a portfolio spreadsheet. I'll show you guys at the end. I'm up on this simulated hypothetical account for my compliance officer. I'm up over 70% this year, okay? So this reading the order flow is important, okay? I don't care what a stock does. I don't care what the guidance is, what the company does, who their competitors are. All I want to see is an institutional order flow making a huge bet, okay? Not every bet I'm going to take. I watch 2,000 bets all day long, and I'll take 3 to 5 of them. Imagine knowing Carl Icahn's positions before he discloses them, okay? That's all it is. Okay, knowing the hedge fund's bets before they actually disclose them. Knowing before. No, 5.5 is net. That's net money I've made. So this trading philosophy works, okay? I trade like this. I've been trading like this for over a decade. Every single year, consistently, it has been profitable. Next slide. Perfect. So let's talk about institutional paper. Who am I watching, okay? I'm watching mutual funds, pension funds, sovereign wealth funds, okay? And I just want to be right under them, okay? I'm watching the 10,000 lot trade, okay? If you guys follow, like I said, CNBC, if you follow John Najarian, okay, this is the way that option traders trade to make money. okay? I'm following the big whales, okay? I just want to be right under them. I want to see a 10,000 lot, and then I will be right under them to trade maybe 20 lot, 50 lot, 100 lot. So follow the whales, swim under them, and basically take their trades just like them. Next slide. Who else am I watching? Institutional paper. So we have mutual funds, we have pension funds, also hedge funds, okay? If someone said to you, hey, I'm going to take $10,000 and you can have every single trade that Carl Icahn puts on, would you put money at that, at risk at that? Absolutely. Everybody is here today for one reason, to learn how to trade better, okay? I've traded for a very long time, and I always say you're not a true trader till you actually blow out an account. I have blown out my account twice so far. Thankfully, it was 8 years ago, and I'll never blow out my account again. But everybody here is here to learn. I'm going to teach you guys the new wave of trading, okay? This is not a presentation that you'll ever see again, okay? This is a different way of trading, and this is a profitable way of trading, and I've shown it over my career. So I just want to watch the hedge funds and place trades that the hedge funds are making. Next slide. Okay, let's go over an example here, okay? And we work with a proprietary scanner that shows me a trade, okay? And it breaks down the trade. As we see here at 11:20 in 10 seconds, sweep detected, okay? That means they sold the bid. We see red here, that means they sold it. So someone sold 11,500 GERN October 2 puts for 11 cents. We see in the implied volatility here is around 96.9, and we see the market on the screen is 10 cents at 20. And this is an opening position when GERN was trading $2.19. So let's do a breakdown of this trade. Simple and easy. Someone is willing to establish a long stock position in GERN under $2. Their break even is going to be $1.89, okay? They're willing to buy 1.15 million shares of GERN at under $2, okay? If the stock stays above $2, this trader will profit $126,000, okay? So if you looked at their risk and their reward, they're risking about $2.2 million, and they're trying to make $126,000. GERN was trading $2.19 at the time, okay? So when I see an order flow like this, okay, some trader is willing to establish a 1.1 million share position in GERN under $2, okay, and all they're trying to collect is 126,000. This is as a red flag as a red flag will get. This is an easy layup. We used to say on the trading floor that this is a berry, okay? This is an easiest setup I can see. The stock is trading 219. They're selling 11,000 puts, okay? So they're willing to get long GERN under 2. And I say a lot of times, there's no chance this stock goes under $2 on expiration, okay? This trader is just trying to collect the premium here, okay? So this is a bullish trade that a hedge fund is putting on. So when I see a trade like this coming across the tape, I can place a trade and a risk versus reward setup on an unusual option activity. Next. So sweep detected. That means they sold the bid. Timestamp, what time actually happens. The red shows if it is bought or sold. Trade size, 11,500. That is a good size order. That is huge, okay? Symbol, GERN. Expiration, October. Strike, 2. Calls or puts. These are puts, okay? If you think about it, when someone sells puts, what does that mean? It means they're willing to get long, okay? They're willing to get long. Price traded, 11 cents. Implied volatility at the time, okay? So out of 2,000 trades in a day, and this is all I did on the trading floor, guys. We used to have some guy that traded for my firm, okay, and he would sit in the pit, and every time they came in to buy puts in potash, he would short 10,000 shares of stock. That's it. It's that simple. And he made millions of dollars in a year, okay? He didn't even take the option trades. So you can use this institutional order flow to either trade options or you can actually trade it to trade stock, okay? So you can say to yourself, GERN, okay? Someone's willing to establish a 1.1 million share position in GERN under $2. And if I didn't like to trade options, if I didn't understand the Greeks, I didn't want to worry about delta and gamma and theta, I could just buy the stock outright, okay? Using this institutional order flow. I could buy stock right here at 219. Know that the hedge fund is basically getting break even as 189. So I could put a stop under 189 and I could just let it ride all day long, okay? So using the hedge fund institutional order flow works great if you want to trade stock or if you just want to trade the options, okay? I'm an option guy. I know my percentage returns is going to be better on options, okay? I can buy a call and it can double, triple, quadruple in value. If I trade stock, you know, I'll get 3 to 5%, maybe 10%. Next slide. So let's look at unusual option activity examples, okay? And we did a breakdown of this trade. At 11:20 in 16 seconds on September 19th, unusual volume was detected, 8.6 times usual volume. A trader sold 11,500 GERN October 2 puts for 11 cents. Their risk on this trade, their risk, it should be reversed. Their risk is $2.1 million. Their reward is at $126,000, okay? So if you think about it logically, and I say this all the time when I see huge put sellers come into the market, don't look at a delta. There's about a 100% chance of this stock staying above $2. This trader is not willing to establish a long position unless they know something, okay? Let's get over it. Let's be smart about things, okay? Hedge funds are smarter than us. They know more than us, okay? I consider myself a pretty intelligent person. Hedge funds have 10 analysts that have MBAs from Chicago or Kellogg or Penn working for them all day long. They sit there and dissect everything to come up with a trade. And then their option guy makes a trade, okay? So they're smarter than me. So I just want to mimic their trades, okay? So on September 19th, if I bought the OCT2 calls, okay, for 30 cents, today they would be worth $1.80. That'd be good for 600% profit. So when I see a huge put seller, I know they're willing to establish a long position. Like I said, I could buy stock if I wanted to, or I could buy calls, okay? So if I bought calls on that day, the October 2 calls for 30 cents, today they're worth $1.80. Next one, at 11:07 in 34 seconds, unusual volume, 14.3 times usual volume. This is my prime example, okay? A trader came in and bought 8,000 SBAC February 70 calls for $1.60. Then, just 8 days later, he sold those calls for $2.60. So this stock only moved $2.18 in 8 trading days, or 2.9%. This trader locked in $8,000 profits on a $1.28 million bet. So this trader profited 62% in 8 trading days, okay, guys? So I'm watching this order flow. I know this trade, personally, I made $2,000 on, okay? I bought a 20 lot, okay? I bought 20 of these calls, and then I sold them out when he sold them out, okay? Not every order is going to work this easy, and that's why I'm here, to teach you guys how to read institutional order flow, okay? To teach you guys the good trades and the bad trades, which ones are profitable, which ones aren't profitable. So in SBAC, the stock only moved 2.9%, and this trader made 62%. As we see here, what is unusual volume, okay? Every single stock has average volume of trades in a day. maybe Apple trades 10 million shares. Maybe the SPY trades, I don't know, 40 million shares, okay? If Apple, which trades 10 million shares in a day, traded 50 million shares one particular day, that'd be 5 times usual volume, making it unusual volume. Options are the exact same way. They have usual volume they trade in a day. So Bank of America maybe trades 100,000 options in a day. If it traded 500,000 that day, it would be unusual volume, okay? So I'm watching peculiar orders, okay? Why don't you guys take a guess of how many stocks there are out there? How many publicly traded stocks are there out there? Not yellow sheets or pink sheets or green sheets or blue sheets. How many stocks do you guys think that there are out there? Yeah, there's around 8,700, okay? How many stocks are there out there that have options listed, okay? How many stocks are out there that have options listed? Oh, you guys are good at this. 3,200, okay? So every single day, I'm watching this. Out of 3,200 stocks with options, I would probably say I've traded maybe half the stocks, okay? The more peculiar the order, the more I actually want to make a trade. And it sounds really weird, but I want to watch these huge bets and then allocate a percentage of my book on these trades, okay? I actually put on a trade the other day in Earthlink, ELNK. I had no idea that was actually a stock, okay? Trader came in, bought a boatload of April 5 calls. I bought them, I'm up 20% already, okay? So I like to trade the stocks that are a little bit more peculiar, okay? There's a stock, Eat, Brinker International. Who knows they own Chili's? I didn't know that before the day, right? And that was one of my best trades last year, okay? The more peculiar the name, the more that I actually want to put on a trade. Next slide. So let's talk about the order process. How do these trades actually get allocated, okay? So the institutional order flow will create an order, okay? They have hedge funds, okay? I'm in Chicago. I'm based in Chicago. I'm right downtown, right across from the exchange, okay? Chicago is the #1 place to trade in the world, period, bar none. It is voted in Trader Monthly every month, every year for the last, I don't know, 6 years before the magazine went out, got bought out, that Chicago is the #1 place to trade, and that's where I am, okay? So the hedge funds will sit there. They'll have 10 analysts researching, dissecting a stock. Is it a good buy? Is it a good sell? Okay. Then they go to their option guy, and he comes up with a trade. Okay. So the institution will create an order based on the research, information, and analysis. Okay. So hedge fund. We got a hedge fund in Chicago. They have these guys. Hey, let's put. What do you think about EAT, Brinker International, or CERN or GERN? Okay. Oh, blah 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 blah. 3 days later, let's get long the stock. Okay. The option guy will go, this is a good trade because X, Y, Z, B, and D, and A, okay? Then they'll get long. They will get on the phone. They will call their broker, okay? Say, hey, we want to sell 11,000 puts in GERN, okay? We want to sell OCT2 puts. We'll sell them for 11 cents. They call their broker. The broker will then shop their order. They shop it to Citadel, Goldman Sachs, Barclays, all the big trading firms, okay? They can execute it if they want. Then they go into the pit and say, hey, we have a customer that wants to sell 11,000 puts in GERN. Does anybody want to buy these? The market makers can then trade with them, okay? I was a market maker for over a decade on the floor. This is the best time ever for a retail trader to trade and the worst time ever for a market maker, okay? I wish I was still a market maker, but now I'm a retail trader. I'm just like all you guys. I'm in the same boat, okay? I trade upstairs. I have 7 monitors and 2 computers, okay? I used to be a market maker. I've transitioned myself upstairs. So then the order gets executed in the pit. Once the order is executed, it goes to the trade desk. They put out the trade, and then we work with a scanner that shows us every single trade in every single equity option across every single exchange. There are no dark pools for options, okay? It's full transparency, okay? Then I take this order flow, and then I base my trades off this, okay? I base my trade on what the institutional order flow. And the best thing about this, okay, is these are all public orders. Once it is traded, it becomes a public order. Okay, once it is traded, it becomes a public order. So, for example, there was a stock. I should get the name of it. It was about 6 years ago. I was on the trading floor. Okay, it was always in the news as it might get acquired. Okay, and what happened is they came in and bought calls in 2 separate months. So they would have bought October calls and November calls. The stock was trading $6 at the time. They came in, they bought October 7.5s and November 7.5s, both of them. Okay, what did I do? Hey, if the hedge fund is buying calls, I want to buy calls. Okay, so what I did is I went out and I bought calls. The next day, absolute next day, the stock got bought out for $9 a share cash. Okay, the broker came in the pit. He goes, my guy knows he's going to jail if he does not bust this trade. He needs to get out of this trade and just pretend it never happened. Okay, so I acted on institutional order flow. I acted on the fact that the hedge fund is taking a bullish bet. So I placed a bullish bet. I talked to my lawyer that day for an hour and a half just to make sure that I can't get in trouble for this trade, okay? So just because the institution is taking a trade, I can never get in trouble. This is bullish activity. This is reading institutional order flow. So like HNZ was a perfect example, okay? Trader from Switzerland, the SEC is going after them. They bought a bunch of calls. I saw that trade going across the tape. If I acted on their trade, I cannot get in trouble because the minute the trade is executed, it becomes a public order, okay? This is the secrets from the trading pits and the trading floor in Chicago. These are the secrets that no one wants you to know, okay? How to read this institutional order flow, okay, and make money doing it. Let's talk about our secret recipe, okay? My grandma, I know, she was like the world's best baker. She used to make my grandpa a pie from scratch every single day. And my grandfather was actually quite a large person, and he would eat probably 3/4 of the pie themselves. So I'm here to teach you guys the secrets from the trading floor that has made me millions of dollars throughout the years, okay? So we're going to put this all together. How do we read this? How do we analyze it, okay? How do we put on a risk versus reward setup, okay? When my grandma used to come over, she'd always put cookies. She'd bake cookies for us. When they'd get out of the oven, they were so hot, so fresh. I used to love them, right? Dip them in the milk. No one knew my grandma's recipe. But for me, my grandma's recipe was the best. So I would always get excited when she was over making her special cookies, okay? So I'm here to teach you guys the recipe and the success plan to trade like this. So I call this the oak ribbit trading plan, okay? And this is very, very important, and this is a very simple 7-step process, okay? There's no, hey, I should have shorted here, I should have got long here, I should have done this or that in hindsight, okay? This is a trading plan you guys can execute on a daily basis to make profitable trades, okay? Number 1, open interest. I always look at the volume of the option versus open interest. I want to take trades when the volume is greater than open interest. I want to take opening positions, not closing positions, okay? So volume versus open interest. Next thing I look at is the chart, okay? I use Ichimoku Kinkin Hoi, otherwise known as the Ichimoku Cloud, bullish or bearish, okay? If I see a trader buying calls on a 52-week low, most likely it is a hedge against a short stock position. If I see a trader buying puts on a 52-week high, most likely it is a hedge against a long stock position. So first thing I look at, volume versus open interest. Okay, I use Interactive Brokers Portfolio Margin. You guys can use whatever you want. Make sure you can have an indicator that shows you volume versus open interest. Then we look at the chart. Okay, you guys can use any technical analysis that you want. You know, I have my personal preference. You guys can use anything you want. There is no reason to take a bullish bet if the chart is bearish. There's no reason to take a bearish bet if the chart is bullish. Okay, I'm trying to decipher which trades are speculation, not which trades are a hedge against a stock position. Then, and only then, if the volume is greater than open interest in the hedge, and then I think it's a speculative trade, not a hedge position, then I can put on a trade, okay? I call it R&R. It's not rest and relaxation. It's risk and reward, okay? I've blown out before, as I said. I will never, ever blow out ever again. I always want to put on a risk versus reward setup. I do not sell calls naked. I do not sell straddles naked. I do not sell, sometimes I sell puts naked, but I don't blow out my account, okay? Every single trade, okay? And write this down, guys. This is very, very important. The difference between a good trader and a great trader. A good trader looks at how much money they can make. A great trader looks at, hey, if I'm wrong, how much money can I lose, okay? That's the difference between a good trader and a great trader, okay? If I'm wrong, how much can I lose? I always want to know my break even, support, resistance, and then I call it TNT. Some people call it tacos and tequila. I call it time and target, okay? How much time am I giving this trade? And where are my targets, okay? Before any trade I ever put on, I always have an exit plan, okay? When will I take off this trade? I actually just found out about a year ago that options have stop losses, okay? I've never used a stop loss in an option in my life, okay? If I'm buying an option, it's already a stop loss, right? So time and target, okay? If this trade works out, and we used to have a guy in my trading pit, and they'd come in to sell us Apple calls, okay? And we'd buy them for $1, okay? I was the biggest independent market maker in Apple for 3 years, between 2006 and 2009, okay? And this guy, they'd come in and they'd be like, okay, what's your market? I'd be like, I'm $1 to $1.10, 200 up. This guy would buy them for $1, and immediately he'd try to sell them for 110. And I said to him, Paul, that's not a good trade because you're actually risking $1 to try to make 10 cents, okay? So always have time and target. Where am I willing to get out of this trade? Where do I want to take profit targets? Next. Okay, so let's go through the oak ribbit trading plan. Okay, so the first thing I always want to look at is open interest. I want to take trades where the volume is greater than open interest. Okay, I do not want to care when the trader is closing their position. I want to care when they're opening their position. The next thing I'm going to look at is the chart, okay? I always want to make sure that the chart lines up, okay? If it's a bullish trade, I want to make sure the chart is bullish. If it's a bearish trade, I want to make sure the chart is bearish. There's been so many times where I've seen a couple years ago, Valet, XCO, every single day, they were buying calls on a 52-week low. If a trader is buying calls on a 52-week low, I think they're buying calls against a short stock position. So if I see a bullish trade, I want to make sure that the chart lines up. Next. So we see here, this is an example, an MRO. Anybody, I mean, you don't have to be the best technical analysis person to know this is a bull channel, right? This stock is going from the bottom left to the top right. So if I saw puts being bought anytime in this time zone, I would not take a trade. Okay, if I saw calls being bought or puts being sold, I would take a trade. But this is a bull channel, clearly from the bottom left to the top right. So if I saw any bearish activity from the institutional order flow or from the hedge funds, I would not place a trade. Next. Every single trade I put on has a risk versus reward setup. So I always want to know my risk versus reward setup, okay? The best thing about options, the most I can ever lose when I buy an option is what I buy it for, okay? You can go out there and you can have so many philosophies and strategies and, you know, look at so many different things. If someone said to me, hey, Andrew, I'll give you $1 million and I want 90% of my trades to be winners, I would say, hey, done. I can do that. You know how easy that is to have 90% of your trades winners? I would just sell a dollar call spread for 5 cents, right? The delta's 5. It's going to win 95% of the time, okay? So it's very, very easy to have percentage trades are a winner, okay? I want to talk about profitability, okay? I present at the Money Show, okay? Someone came up to me, raised his hand. He goes, what percentage of your trades are winners? You know what I said to him? Sir, it doesn't matter. He goes, what do you mean it doesn't matter? I said, let's look at an example here. I have 3 trades. All 3 trades, I'm willing to risk $1,000. Trade 1 loses $1,000. Trade 2 loses $1,000. Trade 3, I make $5,000. Okay? If you broke it down, I would have 1 winner and 2 losers. Okay? That means I only won 33% of my trades. It doesn't matter. It matters the money goes in my pocket. I made 5,000, I lost 1,000 once, and I lost 1,000 again. So I'd be net profitable $3,000. So that'd be an example of 1 winner, 2 losers, but I would still be up money, okay? So I do not care my percentage of trades that are winners, okay? All I care is dollars going into my pocket, okay? I don't care if I take a trade, if I take a bunch of trades that are $300 a risk, and I lose on those. As long as my trade that's a $10,000 risk, I make money on, right? So all it matters, it does not matter the percentage of wins. It matters how much money you make on these trades. Next. Break even, okay? Break evens are always important. I just always want to know these on expiration, okay? It's always important to know your break even. Then the next thing we're going to look at is time and target. In general, okay, and I have to understand that if I place a bet, okay, these are just bets, okay? I have so many different analogies for trading, okay? And one of them is I'm a sports bettor, and I'm just sprinkling bets across the field, okay? And I know as a professional, if you're a professional sports bettor, the ones that you have more confidence in, you're going to allocate more money. How many times have you looked at a chart or you taken a trade and you said, this is the holy grail. This is the best setup, okay? On a setup like that, you're going to allocate more risk on that. On a trade, you're like, it's probably 60-40. I'll allocate a little bit of money, okay? And I always say that, hey, I go to the gym with my buddy. I play a lot of basketball, okay? He goes to me, hey, I can make a shot from half court. I'll bet you anything you want you can't make a shot from half court because the probability is you're not going to make it. And then he said to me, hey, I want 50-1 on my money. Whoa, now we're talking, right? So every single trade is a risk versus reward setup, okay? Always know my time and always know my target. Okay, the better trades that set up better, allocate more money on that trade. Next. So before any trade, I always have targets, okay? This is so important, guys. And if you actually physically write down your target on a piece of paper, it's going to make you actually hold to that target a little bit better, okay? So I always write down my targets. Where do I want to take out of this trade, okay? Do I want to take off 25% of my position at a 25% of profit? Do I want to take off half at a double, okay? Why do we want to take these trades? Why do we care, okay? The hedge funds and the big traders have more information than us. That's it, okay? If you think you can sit there and trade futures on a 5-minute bar or 15-minute bar and over time make money, better to you, okay? Everybody is in this webinar today for a reason, okay? To try to make more money, okay? Trading gets harder and harder by the day. I'm here to make it easier for you guys, okay? So the hedge funds and the big trades have more information than us. That's it, okay? Imagine knowing every single one of Carl Icahn's or David Einhorn's positions before they're disclosed, okay? These are hedge fund trades, guys. These are million-dollar bets going across the tape. If someone said to you, Carl Icahn's about to take a, I don't even know what his bet was in Apple. How much did he bet on Apple? If Carl Icahn's going to take $100 billion or $100 million bet in Apple, would you join his team? Would you take $500 of your own money with Carl Icahn? Absolutely, guys. Okay, hedge funds get very bad reputations. One of the reasons they get a bad reputation is because they make more money than anybody. That's it. Period. Simple. Easy. Okay. Hedge funds make the most amount of money. So why wouldn't I just mimic their trades? Take the best possible trade setups possible. All these trades become public orders, okay? So once they're traded, you're not on the hook, okay? They can get in trouble, but you cannot get trouble. Next. So let's do summaries and key takeaways. Reading paper does not work 100% of the time. Buying calls is not always bullish. Buying puts is not always bearish. Bulls cannot bluff selling puts. So selling puts is the favorite strategy, okay? Trading large paper and unusual option activity will help put probability in your favor, okay? There is no trading plan or trading system that will not incur losses, okay? So how many trades have I had that are losers? I've had a lot of trades that are losers. All I care about is money in my pocketbook, okay? So if someone said I have this system, it works 80% of the time, I'd run for the hills, okay? This is not going to work 80% of the time. All I know is I traded every single day for the last decade, and this is profitable trades, okay? Next. Okay. So over my 10-year trading career, I've made over $5.5 million, okay? This isn't over 1 year, okay? This is all my own money, okay? I watch the hedge funds trade, and I mimic their position, okay? I was looking at my statements from Goldman Sachs the other day when I was at home, okay? I did not make $1 million trading Apple 1 year. I actually made over $1 million trading Apple 2 years, okay? 2 separate years. And how is that possible? All I did, it was that simple, that easy. I watched a hedge fund come in and sell 10,000 put spreads once a week like clockwork for 2 years. Every time that hedge fund sold put spreads in Apple, I got long, okay? I've traded over 1 million equity options in my career and 40 million shares of stock, okay? Stop guessing on trades. Stop looking at charts and trying to make a reason to make a trade, okay? Start making money. Well, it wouldn't be today. It'd have to be Monday. Start making money today, okay? Guys, this strategy works. It's simple. It's easy. I should update this. I'm currently up over 70% year to date. We run an account, and I'm up over 70% year to date. It's actually 69% year to date on a hypothetical for compliance $100,000 account. Okay, so this week I made $8,500 on this account. Okay, I'm an active trader. I've traded this unusual option activity. I've made over $5.5 million in my career, and I've made over $1 million in Apple, not 1 but 2 years, just trading institutional order flow. It's that easy. Next slide. So we have a workshop on October 29th at 8 p.m. You'll learn the Oak Ribbit trading plan in more depth. You'll learn why volume versus open interest is so important. I will dissect the whole option chain in one trade. Why I mimic the hedge funds. There's always different setups for different traders. Do I want to do call spreads, put spreads, condors, stock outright? How I use stock volume compared to option volume. Figuring out a non-blowout trading plan, okay? So help determine which trades are winners and losers, okay? Learn the secrets from that Goldman Sachs doesn't want you to know from a trader that has made over $5.5 million in his trading career from the trading floors, okay? I left the trading floor a year and a half ago, okay? I always say if you want to find an educator, find someone who is actively trading, has traded on the trading floor, so he actually knows what he's talking about, and is actually risking his own capital, okay? Every single trade I take is my own capital, 100%. I have no backers. I have no one's giving me money. Not a simulated account, 100% is my own money. Next one. So we have a special webinar on October 29th, guys. This will sell out probably today, okay? I've made over $5.5 million, okay? Learn how to see Carl Icahn's positions and the hedge funds before they disclose them to the public, okay? Stop taking the guesswork out of it and start making money, okay? Learn a confidence scale and avoid blowing out your account, okay? Currently, I have about 80 positions on right now. I'm an active trader. I'm trading all day long. I will trade any stock possible as long as it gives me a signal, okay? As long as a bullish signal is set up, I will allocate a percentage of my capital on this trade. So we are doing a special seminar price for $47. It is a 2-hour workshop that you'll learn this more in depth, okay? So we're doing it at the end of the month. You can sign up with optionsonthefloor.com/win. Okay, this price is only available for the first 200 students. This is live course, and it will be recorded and posted online. This will sell out probably within about half an hour. We only have a certain amount of seats, so make sure you guys get in right now. If you can hit it, click it a couple more times. So guys can sign up right now, and you guys, I'm here to answer any questions you want as well. Okay? There's not one option, equity option question you can ask me that I will not answer. Okay? So you can sign up right now on optionsonthefloor.com/win, and this will sell out, so you guys should sign up basically as fast as you can. So I've got a couple questions here I'll answer. When you watch hedge funds trade, how do you differentiate the order from the hedge fund or the normal retail trader? Very, very simple, easy, okay? The hedge funds, okay? Hedge funds are going to make huge, massive bets. So I don't watch 100 lot here. I watch 10,000 lot, 20,000 lot, 50,000 lot, okay? So a retail trader, I'm a retail trader, guys. My 100 lot, in the grand scheme of things, doesn't matter, okay? My 50 lot doesn't matter. I'm watching 5,000 lots, 10,000 lots trade. Can I share my screen? I can show you my portfolio spreadsheet for the year. Ooh. Okay, so feel free. You guys can call the number on, or you can sign up here. I do not take any. I do not take any outside capital to invest money. I don't need it. I've made enough money where I don't need anybody else's money. I've been trading options for 7 years. What is the best strategy out there? Reading institutional order flow. Period. That's it. Okay. In this workshop, you guys will learn everything you need to know to trade like a pro, okay? You'll learn everything you need to trade like a pro in this workshop. It's $47. It will sell out too. If they're so smart, why do they underperform the market? They've actually only underperformed the market like in the last couple years. Usually they outperform the market. And the problem is you have someone like Paulson that has such a big position in the GLD that they control the market so much. Right. I think the workshop's going to be at 7 p.m. or 8 p.m. The workshop's $47, guys, and it'll be a more in-depth strategy than what we've gone over. But if you guys have any questions for me, let me know. I'm here to answer questions about unusual option activity and trading like this. I do not use stop losses in options. An option is a stop loss. What's your profit since you lost the floor? I'm up 69% this year. I can share my screen. I can show my portfolio spreadsheet. You also have Thinkorswim has a tool needed to trade your method. Thinkorswim, you can create your own unusual option activity scanner, but it's not very good. Okay. What does it cost to obtain this information? Okay, we use a proprietary scanner that shows me all the trades, but it doesn't matter what the scanner says. Okay, it's about analyzing the trades, right? I always say, like, if you're like the best golf, if you want to learn golf, who do you want to learn golf from? Period. Tiger Woods. That's it, right? If you want to learn golf, you're going to learn from the best in the world, right? I've been doing the same trading plan for 11 years. Okay, for me to come in and look at the scanner and decide which trades are good and which trades are not good, I can do it in about 10 seconds. You know, and it takes a long time to read the scanner. Okay? It's like reading how people used to make money trading stock volume during the day. How can I use this intraday with stocks? Okay, using unusual option activity. Basically, you know, you can use this to trade stocks as well. If you're not an option guy, it doesn't matter. Okay, you can say, hey, a trader is willing to establish a long position. I want to get long. Okay, the other day they bought 35,000 calls in TSO. Okay, TSO they bought 35,000 February 60 calls. Okay, you could use it for a bullish setup, right? Just buy the stock outright. You don't need to deal with the options if you don't want. It's just giving you signals. It's giving you bullish signals and bearish signals all day long. Okay. Will this course discuss how to trade options on earnings? No, this is an unusual option activity course. This is an unusual option activity course. Implied volatility criteria for selling options versus buying. We will go over historical versus implied volatility in the course as well. So if I see open interest call rising, the stock is going to go down. No, that's not necessarily true. In the course, in the workshop, I will teach you guys how to look at an order flow, okay? How to look at a setup. Why certain trades are good setups. Why certain trades are bad setups. Why I want to take certain trades. Why I don't want to take other trades, okay? So in this course, I will teach you guys everything you know. There's not really any good scanners out there anyways. We're actually working on a scanner, but too far away. Ichimoku Cloud is the best indicator out there, technical indicator. How much do you need to trade the account? This is a great, great question. I think to open an option account, $3,000. I think $3,000. Will you be taught to fish or to feed? I'm teaching you guys how to fish, okay? I've made so much money in my career, I feel it's my obligation and duty and responsibility to teach these people, okay? I used to always say when I was younger that people that teach, they teach because they can't do, okay? Well, I look at it differently now. If I don't teach people what I know, then when I eventually die, because everybody dies, right? When I eventually pass away, okay, if I don't teach people what I know, then the art and the science will be gone, okay? Imagine, if Michael Jordan didn't teach people how to play basketball, have the will to win, right? It'd go away. 69% due to compliance. I have to say it's on a hypothetical account, okay? I'm trading 100% of my own money all day long. Every single one of my trades is between $500 of risk and $5,000 of risk, maybe $10,000 sometimes, okay? For my compliance officer, I have to say on a hypothetical account. What platform do you use to trade? I trade portfolio margin through Interactive Brokers, and then I also trade, I use Thinkorswim for my charting. My dad does trade, but he was not a trader. Can I give you the cookie recipe? Those cookies are amazing. I want to have some right now. If I'm a stock trader who is unable to hold positions overnight, does this work for me? Absolutely. You can day trade stock as well, okay? You can wait for the 2 to 4 signals daily that are the best setups, and you can take a stock position on this as well. Would this course help with swing trades or intraday? It helps with anything. I have positions in weekly options, October, March, April, 2000. I have a 2015 position in UPS. Okay, so this works with every kind of methodology of timing. Okay, I can do it swing trade. I can do it for a short time period. Okay, you can use these signals to basically put on a risk versus reward setups for as long as you want. You can do stock if you want. Yes, you can use Thinkorswim. Thinkorswim I like the best. The institutional order flow is through a scanner, okay? So it doesn't matter what the scanner says, guys. I'm here to dissect the scanner for you, okay? It's like saying to Tiger Woods, hey, what do you think about the wind trajectory, okay? I don't even golf, okay? But if I did golf, I would want Tiger Woods right next to me saying, hey, the wind is going a little bit this way. No one can see this besides Tiger Woods, right? I think you should use this club versus this club, okay? So, I don't even like golf, but I'm saying if I did have to golf, I would want Tiger Woods literally right next to me to tell me what club to use, what the wind is. Oh. We got more questions coming in. My UPS January 2015 is based on unusual option activity. Yes. They bought 120,000 UPS January 2015, 110 bull call spreads. So I bought some calls. If you guys have any other questions that I'm not answering, you can call the phone number. My team is here waiting for you guys to call. You guys can feel free to call the phone number and ask any questions you want. My take on Facebook is going to go up until Twitter IPOs, and then it's going to be an ATM out of Facebook into Twitter. You do need chart skills, but then unusual option activity. It works on ETFs in the Forex market. It works on ETFs on the Forex market. I'm up 40% on my UPS trade in 2 weeks. I think it's going to be 7 o'clock Central, but it will be recorded, so you guys can watch a recording as well whenever you want. So like I said, you make sure you guys sign up for this course, optionsonthefloor.com/win, okay? This class will sell out, okay? That I can guarantee. I can't guarantee profits in trading, but this class will sell out. Stop losses, no, I do not use stop losses ever. An option is a stop loss. So any more questions here, guys, or we have to wrap it up? You guys can call the number and ask any questions you want. We will be here for the next couple hours.
All right, great. Thank you. Good deal. Thanks, Andrew. We appreciate you being here today, guys. I'll type in this link one more time for you. It's optionsonthefloor.com/win. I can tell you he's written commentary for our site, sharing his trades, and the commentary he writes is very clear where he's buying, where he's selling, sharing his trades, and has done an outstanding job. So I think that you guys will definitely learn a lot in 2-hour workshop with Andrew. It's $47, and you can check it out at that link. So at this time, I'm going to turn things over to our next speaker. Before we do so, I know a lot of you guys are probably signing up for that, so I'm going to put a timer up here. We'll give you 3 minutes, and then we'll get started with the next presentation, but give you guys a quick break. Yeah, boss, on answering the questions, I know Andrew and Rob and other guys would be here all day if they could, but we've got to kind of cut it off at some point. To get to the next speaker. So we appreciate you guys and your patience being here today. So thank you, LW, appreciate that. But we'll put a timer up here for 3 minutes, give you guys a chance that are signing up, or if you want to grab a cup of coffee, and then we'll be back with our next speaker, John Seville.